All right, let's start our videos. Okay, so today I will be creating my trading setup. I have my trading plan, but I haven't really created my trading setups, like what setups I'm gonna take, like how it's gonna be valid, things like. Okay, I have particularly one setup that I almost trade uh, it, and it is pretty good. So first, let me explain that. Okay. So my setup is basically it's simple. So it's basically a weak entry or weak fill, you can say. So if the candle is like this, okay, if the candle is like this, closed like this, and if the next candle is coming down to create a bottom wick first, then I'm going buy here. On some case, I just enter in the opening of this candle. Uh, in some case, I wait for a bottom wick to form and I enter at the bottom, like weak entry, to expecting the market to at least fill this range. Okay, I do that. So in this method, I basically take like 10 to 15 to 20 pips profit, not that much. It's not the RR is bad for this. Okay, so now let's begin. So how should I like first what to look for this trade? So first look for a trend, okay? If the market is like this, tang, 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 okay? If it is trending, right? If it is trending, so what we have is we have higher high and higher low, okay? So let's guess the market is here, okay? Let's take that the market is here, and the next 1 hour candle or 30-minute candle or 4 hour candle close like this, okay? If this candle close like this, okay, it has to close above this higher high, previous higher high, and like here, the bias is bullish, right? Bias is bullish. So what I expect here is the market to at least fill this range before doing anything. It might go straight up or it might go straight like go down. Okay, so I expect market to fill this range before doing anything. So in this scenario, I wait for a small bottom wick to form and the next candle to like to wait for candle to fill this range. So if the candle is coming down, uh, okay. So when to expect for steeper wick and when to not. Okay. For that, look left first. Look left. If there is a candle closing above this range, same, and look where the next candle had created a bottom wick before going up. Look that and expect bottom wick to be formed there, or check if there is liquidity here or not. If there is liquidity holding here, not grabbed liquidity below this, then we could expect a little bit of steeper wick. But if the liquidities are all like cleared down here, then we expect a small bottom wick, or we can also interact the opening of the candle. Okay, so if we are in bottom like weak entry, on the flip of this candle, we bring our stop loss to our break even and let the candle to fill the wick. Okay, that is our risk management first. This is the first setup. Okay, this is the first setup. Can you make this arrow a little small? No, okay, no, okay, it's all right, it's all right. Um, okay, this is the setup one. Okay, now let's go to the next setup. So this applies in both bullish or bearish trend. So the next setup is we have this, this, and this, and we have this. Okay, okay. Let's guess the market is in this condition. We are in uptrend. Okay, we are in uptrend. We created a higher high, higher low, higher high, and the next candle is closing below the higher low. Okay, that basically means that we are breaking the what is it? Structure. Okay, we bring the range two. This is range one. This is range two. Okay, we bring the range two. So in this case, we have to look many things. Okay, first look if there is liquidity left down going here or not, how the market has played, how the consolidation. If at this top area, if the market is like this in small time frame, had gone like this, then you can see here that liquidity here has not been cleared yet. So market has to come up to clear the liquidity at some point. Yeah, that is the that is what we have to look. So right now we're bringing a structure, but we have to be aware of that liquidity, and we also have to adapt the price. Okay, so let's say a candle closed like this, smaller wick, no nothing. In this candle we cannot take trade because we have no range down to go. Plus another candle might just you know uh break, like might go up. We don't know. We don't have range to trade here, basically, if I have to say right. So what the next candle can do is it can just break it slow first. Okay, break it slow and give us a fake out like this. It can do like that. Okay, it can do. So basically, it's a fake out. So clearing a liquidity below here. Then we have a range to go till here, till this support, till this resistance. We have a range here, and we also have the range in this candle. If it is like this, if it is like this, then what we can expect is we are like it's a fake out, and uh, we have a bullish bias here, and we also have to look the higher time frame, the 4 hour time frame, how it's gonna close next 1 to 2 hours. So here what we can look for trade is we can look for market to create a top wick, come down, create a bottom wick. Again, if it is breaking its on high, we have a range till here. Okay, we have like this, and this candle created a top wick, came down, created a bottom wick. And if it is again breaking its on high, then we have range till here. We can take a buy till here. Okay, that is our third setup, or it is second. Oh, it's a second setup. Okay, no worry, no worry. So that is all. And in this same setup, if there is this, then we can look for sell. look for buys in the bottom wick. If there is not enough range in this candle, if the top wick is small, then we have to wait for the market to create like breakage high, create a bottom wick, and rebreak. If it is like this, then we cannot like simply take a buy on this. It might like straight go up here without creating a bottom wick, but like we that would be like catching a flying air balloon. Just kidding. So, yeah, that is setup too. Mm, that is a fake out setup. Okay, that's basically a fake out setup. So, recently I also saw this one setup. That was like this, like this, like this, like this, like this, like this. Okay. So it was an uptrend basically, and the 4 hour candle created a range. I'm like it created a top wick. It created a range to fill on its top, and the first, what the market did was market was creating this double top. So basically, see a double top is creating a double top, but it hasn't break the structure yet. For a structure to break, it has to come down, and from here create resistance. That is a structure break, showing us downtrend. So here, what happened is there was this 4 hour. Okay, it created this, and the what the first 4 hour did was it filled the what it did. It filled the top wick. Okay, it filled the top wick first, came down, created a bottom wick, and so it created a top wick. It created a bottom wick, and again it start to re-break its high. And it just stood up. It was like boom, like this much. Okay, I'll show you a little bit in the market what I'm talking about. It just did that. Okay, so why here what we can ask ourselves is that it came up, filled the range, it did its duty, it's did duty like it has to fill the range. It came down, it has to create a bottom wick. Okay, it has to create a bottom, create a bottom. Again, it's rebreaking its own high. That means there's no reason for a market to like rebreak its high again. Okay, or no, we cannot take this straight. Yeah, we cannot take this straight because it could be no, but we can take this straight if any like small time frame candle closed above this. Okay, like 15 to 30. If it closed above this, then we can take trade. But like we cannot take an impulse entry here because first create a top wick. There was no bottom wick. The market just fall off for a small like fall down for let's say fall down for like bottom wick, came down for a bottom wick. While coming bottom wick, it might have created a liquidity up here again. Okay, it might have created a liquidity up again here again. So what this candle might can do is just come up, grab the liquidity, and come down. If it is rebreaking its own low here, then we can go for a sell, but that might be risky because mm, we have to look certain thing for that. Is there liquidity down here? What is the bias? And is there a chance for market to create a little steeper bottom way? Okay, that we have to look. Okay, let me show you that here. So look, this was I was talking about. This is what I was talking about. So what the candle did was it closed above this candle. There was a wick to fill, and this was the. I would have taken this trade on. Let's say here. No, I don't know. Yeah, I don't know. I wouldn't have taken this trade maybe because there's a resistance here. It has to tap this resistance, and this next 4 hour, what it did was it filled the range at the first, okay, at the first minute. I'm like not minute, at the first starting of the candle. Okay, okay. It didn't fully fill the range, but it somehow filled the range. Okay, it didn't break itself, it somehow filled the range. So this was starting of the 4 hour candle. What it did was it created up, down, and this was a start. It went up straight without creating a bottom. It went straight, did that, and came down for bottom wick, and it closed above. And this candle closed above. So what I have traded here is I would have wait for this 5 minute, like this 30 minute to close bullish. Okay, so if we look left, again look, it closed above this also. Uh, if we closed above that, we have a minor resistance here and here. Okay, these are the next levels. So look, I would have expect a market to like burst. I would have entered here with an opening of the candle. Why? Because this is because of volume. Okay, see, there is a big volume. This is showing. This is not a fade out. Okay, this is not a trap. Let me explain you why. So why is that? Look, 4 hour, what the 4 hour candle did. Okay, 4 hour candle did was it closed above. I mean, like it filled above. Uh, I'm like it created a range to fill, and what the next candle did was it filled the range, filled the filled the range, and the candle started to drop down. So we had liquidity. Let's say if this is a we could have a liquidity up here. So if the market has to go down, it will just grab the liquidity and come down. It would not have closed above this. If it's closing above this, then there is some reason for market to go to the next level. Okay, that's why it's not it's not a fake out, like fake trap. Okay, that is a setup three. And what is for the setup three, four? I think that is all my setup. Okay, yeah, I think yeah. This is closing above, and this is for fake out. So basically, yeah, like this is the resistance, and we have this candle closing like this, and our next candle is closing inside the range. Then we have this is a fake out, so we can take a sell here, buy here, and wait for the market to close that. There's a fake out. Yeah, this is it for till now I would have like I could add more setups in future, but for now I'm trading just this, and I'm pretty profitable, if like to say, for a couple of weeks. Let me show you this. I have, so in 2020 July I passed this, on 20th of Jan I have, okay, let me show you all. I have ordered this account, this three account. I failed this account, so I've I did, he did. So this is neither failure, neither pass. It is in track drawdown. So this is the candle. Since I'm trading this account since February 24, uh, and I am this much in profit.